Hey, good morning friends. This is Jagdish Ahuja, your teacher trainer transformer, and today is 31st of March 9 a.m. just before the markets begin. And yes, the world is still reeling under the corona shock, shall I say, with the cases going up to almost 7,85,000 cases currently. And things are not yet stabilizing out there, but some signs of things stabilizing in Italy are happening, and Italy is showing a deceleration, which is a good sign. Seems that Italy may get out of it. Spain still reeling under. US, the nerve center, the epicenter of it. But then, in spite of all that, the markets there have actually rallied. And just to give you an idea, the Dow was up 690 points yesterday. So what does this tell you? What does this tell you about how the markets are behaving when there is literally death everywhere and cases are rising? It reminds you of the old adage that buy when there's blood on the streets. And this time it may not be blood, but this is like death on the streets. So people are buying, otherwise why would the markets go up like this? And taking a cue from that, I was just thinking, what if we look at our markets? Our markets too, we had a weekday yesterday, almost 400 points we fell at 8281. And we are now in between. We are neither above 8.6, now are we below 8.2. So we are somewhere in between. But one thing is certain, that people are buying, and the smart money is coming in. The smart people are buying stocks right now. Otherwise there was no way the US markets would have gone up without somebody buying, right? And so same thing applies in India. So somebody is obviously buying. Some people are willing to bet that this coronavirus will end, maybe whatever time frame, but the long-term guys are buying. So when we come to this, what exactly do you think we should be buying? First and foremost is buy the stocks you bought from the supermarket. Buy the companies of those. So when you went shopping this time, just when the lockdown happened or after the lockdown happened, whatever you bought for yourself in your grocery, buy those stocks and just check what were the brands you bought. Pick up those consumer stocks, because those consumer stocks will give you return, and those are the ones which are flying off the shelf, and those are the ones in demand. So the companies are still doing well. So buy those stocks. The second thing which you could buy is pharmaceuticals, because whether you're at home or whether you're at work, you need to have your medicines, and medicines more at this point of time. Plus there are a lot of companies which are coming out with kits and alternatives to seeing that for the COVID issue. So look at those companies and invest in those companies a little bit. But yes, the caveat still remains. These are the two sectors which I like. The third rank outside the sector would be the logistics sector, because today you're all staying at home, and what actually is important is that the logistics is the one which is delivering it to your house, and that sector requires a key intervention by the government worldwide. UK, USA, Canada, all of them, in Australia, all of them have declared the logistics sector as an essential core sector. So I think it's time India also recognizes this sector and gives it the much needed freedom it requires and the much needed protection it requires. So we could look at that being the biggest that could be another sector which one could invest. Now coming to how much one should invest, that I leave it upon whatever is the sort of money you have, because everybody's risk appetite is different. Do you have the money? First of all, are you willing to lock the money? Are you willing to see a downside as well? Are you willing to wait for a year? Because things are not going to just overnight change. It's not a magic trick which is going to happen. So if that being the case, then you need to be prepared to wait with the money. Can you afford that surplus is the first question you ask. If you can afford the surplus, then definitely keep that money and start investing out of that money. Should you have not started now, at least invest 25%, so that you can start the process of getting used to the markets. Again, I'm just giving you, this is my personal opinion. Take it or leave it. It all depends on every individual, every case to case, because now cash is king, and that is why you're getting stocks at ridiculous prices. It's not that the stocks may not fall more. It could, because as the epicenter changes, the virus mutates, blah blah blah, anything is possible in this world, but valuation wise what you're getting today is a bargain. So look at what you can buy, what you can hold comfortably, what you can hold without losing your sleep. Buy in stages, don't be in any hurry to buy, and start investing. And that's the mantra for today. Signing off, this is Jagdish Ahuja. Take care. And yes, intraday 8,600 today is the key for the market. Should the market go anything above 8,600, then it opens up a new chapter again for the next couple of days, to rally back slightly higher. But yes, we are not out of the woods. 9,450 is the trend, the monthly trend line. So we are very much in bear territory. So don't expect to buy on rallies and buy on rises. Wait for the market to cool a bit. Wait for you to get your money's worth and then invest. Till then, live free, of course, in this lockdown. And cheers. Have a wonderful day. Bye bye.